You're watching today's market comment by Geralambos Pisuros. I'm Cristina Marujos, and thank you for joining us at XM.com. The US dollar traded higher against all the other major currencies on Tuesday, perhaps as increasing concerns about the performance of the Chinese economy after the disappointing cakes and services PMI resulted in a flight to safety. The currencies that were beaten the most by the greenback were the Aussie and the Kiwi, but the Japanese yen was not far behind as yield differentials continued to haunt it. With U.S. Treasury yields climbing higher and the Bank of Japan keeping a lid on Japanese government bond yields, the gap continues to widen, thereby pushing dollar-yen higher. Dollar-yen closed Tuesday above the 147 mark for the first time since November, prompting a strong intervention warning from Japan's Vice Minister of Finance for International Affairs, Masato Kanda. Speaking to reporters, Kanda said that they will not rule out any options if speculative moves persist, adding that the currency moves need to reflect fundamentals. Just before the 148 level, the pair started to pull back. Now it remains to be seen whether investors will resume pushing the pair higher and risk an actual intervention episode, or whether they will allow it to correct lower. China's worrying economic performance may not be the only source of fuel in the dollar's engine tanks. The downside revision in the euro area PMIs for August ranked the recession alarm bells louder, adding fears of slowing global growth, while the steep rally in oil prices may have allowed some traders to reconsider the likelihood of another hike by the Fed, as it could result in higher inflation in the months to come. Although investors remain largely convinced that the Fed will not act at its upcoming gathering, the probability for a November hike stands at around 45%. Dollar traders will focus on the ISM non-manufacturing PMI for August due out today. Expectations are for a minor decline, but given that the preliminary services PMI from S&P Global pointed to a more notable decline, the risks surrounding the ISM index may be tilted to the downside. The reduced risk appetite forced all three of Wall Street indices to close in the red yesterday. However, the price action is far from suggesting a negative outlook. The pullback may continue today if the ISM PMI increases the probability for another hike by the Fed before the end credits of this tightening crusade roll. Today's agenda also includes a Bank of Canada decision, and traders are largely expecting the bank to stand pat. Thank you for watching today's market comment here at XM.com.